Hi everyone, and thank you for tuning in. In this video, I'm going to answer the question if Roblox stock is a buy. Before the video is through, you get your answer. I'm going to use my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework is customer value, and for Roblox, it's free to join and use. So free, as I usually say, is an excellent value. The company makes money by selling premium items and experiences. So even though you can play for free, there's things on the platform that you can buy that make your experience more fun. For example, you could buy special shoes for your avatar that make your avatar faster for an entire week. Items like that folks can choose to buy if they want to make their experience a little bit more fun or a little bit different. You can say. Now they've done an excellent job in selling those premium experiences because revenue has increased from 325 million to 1.9 billion between 2018 and 2021. So they're doing a good job of selling those items. Additionally, they boast, as of its most recent update on September 15th, they said that they had 60 million daily active users on the platform. So that offers people network benefits. For example, my daughter uses Roblox and her friends are on the platform as well. Her classmates from school are also, many of them are also on the platform. So it makes it more fun that you can go on there and most of your friends are on there too. So it benefits from that network effect. So excellent customer value. Moving on, the next step is unit economics. And Roblox, interestingly, I mentioned those premium items, those unique experiences on the platform. It outsources all of that. So it doesn't spend the money to create these things. It has a program where it asks third-party developers to make these things. And it says, you know what? If your item or experience is successful, will give you a percentage of the revenue it generates. So they'll earn a percentage of that revenue. That means if a developer makes 10 items and 9 of them are unsuccessful, Roblox is not paying for that. So they're only paying for the items that are successful, and in that way they're not wasting any money on items that could potentially or not potentially generate revenue. So that's an interesting model that should prove to help profit margins longer term. However, despite that, they're still generating losses on the bottom line and they're actually growing. Operating loss rose from 88 million in 2018 to 495 million in 2021. The company's investing in the platform, in the foundation, in the technology, in the security, and all of that stuff to make sure that it's functioning. And all of those costs are adding up, and they don't have enough revenue to make sure that it is enough to cover those costs, which is surprising considering that their revenue has scaled so significantly in the years. I noted earlier their revenue rose significantly in the last 3 years, but they're not showing any efficiencies in scale because their operating losses are actually rising as revenue grows. So that's a troubling sign, and that's a curious sign that I would make note of as an investor here. The next step in my framework is the total addressable market. And according to McKinsey, which is a large business consulting firm, they note that the metaverse could generate 5 trillion in revenue by 2030. So right now the metaverse is not, even though it's relatively popular, it's only a fraction of the size that it could be in 2030 as technology develops behind it. Competition, there is a lot of competition with other platforms to vying for people's attention. There's lots of free stuff out there. You've got meta platforms, Facebook and Instagram. You've got TikTok. You've got YouTube. You've got Pinterest. You've got Twitter. There's a lot, consumers have a lot of options for their time and attention. And so that's what Roblox is vying for in that to attract those customers. And then longer term, Meta Platforms is developing its own metaverse platform. That hence why it changed its name from Facebook to Meta Platforms. It's already spent 10 billion in developing this. 10 billion in developing its metaverse. Roblox total revenue was only 1.9 billion. So Meta Platforms spent 5 times as much as Roblox's overall revenue in developing its own product. You better believe that they're going to be a competitor in the metaverse space. As the industry grows, Meta Platforms is staking its viability on being a large player in there. And they also signaled that there's more to follow. It wasn't just we're going to do 10 billion now and that's it. They said we did 10 billion now. It's probably going to be even more in the years to follow. The next step in my framework, and I like to say it's one of the more important steps, is that of valuation. And for Roblox, I use the price to free cash flow and price to sales because, like I mentioned earlier, it's not profitable on the bottom line, so I cannot use price to earnings. And so its price to sales is, you see here, that's on the top at 69. It's about at the average price to free cash flow it has been going back a couple of years. It was much cheaper in this metric earlier this year, but the relative price increase was not because the stock price increased, but it was because the company's cash flows decelerated. Like the other metrics that I noted earlier, the company is facing these headwinds as consumers are spending more time away from home, and that caused the company's cash flow to decelerate, and that caused the price to free cash flow to increase. All right, and then looking at the price to sales ratio, it's trading at 9.2, which is the lowest that you've been able to buy Roblox going back to all the way back to May and earlier in 2021. So, looking at a relatively fair historical valuation for price to free cash flow, and then looking at a relatively cheap valuation and price to sales, we could say that the stock is fairly priced. We can't say that it's cheap because you were able to buy it much cheaper earlier, and a price to free cash flow of 69 on absolute terms is not cheap. So we can't say it's cheap. So we could say it's not cheap. We could say it's fairly valued, a little bit moderately priced, but in no scenario can we say that it's cheap. Final step in my framework considers risks, and the primary risk with Roblox is that consumers are spending more time and money on away from home experiences like restaurants, travel, concerts, playing sports, doing other things outside because we're tired of being home. We were stuck at home for almost 2 years. So now most people just want to get out and do something outside. And that's a risk for Roblox because it's mostly an indoor activity. It's what people do when they're inside on their electronic devices. And so it's facing headwinds because of this. And investors don't know how long and how deep these headwinds will be. And secondly, I note the growing losses on the bottom line. Even during the surge at the pandemic when they experienced a massive influx of customers and revenue, even during that time, they weren't able to generate profits consistently. So there is a risk that the company may not achieve profitability, or it needs to reach such a large scale to reach profitability that it may never grow to that scale to reach profitability. By the time it grows that big, a competitor like Meta Platforms might be in a position to attract a lot of its customers, and so investors may never see a time when they get to reap the benefits from their investment. Being a professor, I'm a university professor. I've been so for several years, teaching finance and economics. I'm used to grading, so let's give some grades here. Roblox, on customer value, I give them an A+. Free is an excellent value, and to top it off, they have attractive games and experiences, 60 million daily active users, offering a network effect. You're always able to find someone or some group of friends that are playing online, and so you can have a group experience there. A plus for customer value. Unit economics, I gave them a C plus here because they're generating massive losses on the bottom line that are actually growing even as revenue is growing. I didn't like what I saw there, so I gave them a C plus here. I didn't give them a lower grade because I can see the foundations of expanding margins. They do have that favorable model where they outsource the development of the games on the platform, so that de-risks them a little bit. And also, they haven't monetized all of their users yet. They're developing it. This hasn't came out yet, but management has noted they're going to try and develop advertising, and advertising is a high margin business. If they can implement advertising and have it be successful on the platform, that can do a great deal to increase profit margins. Okay, moving on to total addressable market. I gave them an A plus here. This market estimated to reach 5 trillion by 2030 is massive. They can grow for the entire decade and not reach the ceiling in that size of a market, so A plus there. Competition, I gave them a B, even though they've done relatively well attracting 60 million daily active users, and you can't get cheaper than free. There is the rising risk of meta platforms investing heavily in the metaverse, and they could become a force that attracts and takes away a lot of that growth and user base that Roblox develops. For that reason, I graded them very low on risks. I gave them a C, which is the lowest out of all the grades they got on risk. Consumers are spending more time away from home. That's decreasing revenue growth. That's accelerating the decreases in average booking per daily active users. So it's not heading in the right direction. And from an investor standpoint, you don't know how far these headwinds will go. So risks are, they get a low grade in risks there. And then valuation, I gave them a C plus. They're not profitable on the bottom line, so I can't use price to earnings. If I have to use these other metrics, then I'm going to ding them a little bit. And then the price to free cash flow wasn't cheap. They were relatively fair on that. The only area that they were relatively inexpensive was price to sales. And, sales, I always say that sales, I look at sales a little bit suspect when the companies are generating losses on the bottom line. It's easier to generate sales when you're doing so unprofitably. So for that reason, I gave them a C plus on valuation. So now to answer the question that you've all been waiting for, is Roblox stock a buy? Yes, it is. Roblox stock is a buy. The factors that sway my decision here mostly were its excellent customer value. Offering their services for free has attracted 60 million daily active users, and they have not yet monetized all of those users. So once they develop, they're in the process of developing advertising. When that comes into play, that's going to help them in their unit economics. That should help them in the profitability. So the metrics that they got a poor grade on should improve once they develop this advertising. So that is a big reason why they got the buy rating from me, even though their grades weren't all that fantastic. They're still, I would say this is not like one of those stocks where I would say, it's an absolute bargain buy. You should go out and buy it. It's one of those that's kind of on the borderline. It was close to where I could have said that it's a hold. You should wait for the company to develop advertising and see how that goes before buying it. But if I was to say, the reason why I didn't say that is because if you were to wait for advertising to develop, then that could be priced into the stock and the stock price could increase and you would have to pay a higher premium than what you're able to buy it at right now. So for that reason, it swayed me. I said Roblox stock is a buy. But I understand that you might have a different opinion, so let me know what you think in the comments below. I'd be happy to hear your opinion and talk about it with you in the comments down. And so thank you for tuning in, and I'll see you next time in the series if this stock is a buy. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.